Here is the truth. Oil and the dollar are like the two invisible lever pulling on the entire financial system. If you ignore them, you are basically trading blind. But once you connect the dots, trust me, charts stop looking randomly and start telling you a story. Before I jump into the story of how I figured out the oil and the dollar connection, let me just say this. If you like learning trading the way you would learn from a friend over a coffee, no boring textbooks, then hit subscribe button. That's way you don't miss the next piece of the puzzle. So let me tell you, when I first realized this, back in 2022, oil went to the moon. $120 barrel. And I remember thinking, wow, energy stocks are flying. This is the gold mine. But then the Nasdaq got really smoked. And at first, I didn't really get it. Then I saw the other side. The dollar was actually surging. So strong dollars plus expensive oil means it's a nightmare for tech and the global stocks. That moment, which hit me really hard. Macro, this isn't just headlines. It was cause and effect. So here's how I'm going to explain oil. It's the world's blood. If oil is really expensive, it's the world is paying the taxes. And companies pay more. Shipping costs rise, inflation rises. That makes the Fed really panic. And if oil is cheap, business and consumer get more relief. So how about risk assets going to start breathing? Look at the chart of the crude oil. I'm going to pull up the chart of the crude oil, and every time you're going to see about this, it's actually right now it's a current one, and I'm going to open the previous one. Yes, now you see here, it's the crude oil chart right now. I have opened it. So every time oil spiked, you will notice inflation headlines follow it. And it's not just coincidence. Now the US dollar think of it like as the global scoreboard. If dollar is going to strong, US export is going to suffer. Commodities like oil, gold going to drop, and global market feels way more stress. Similar, if dollar is weak, money is going to flow into the risk asset like stock, crypto, even emerging markets. So I'm going to pull up the dollar chart right here now. You have seen here like from 2022 to 2023 how it spiked. And if I open the same way the dollar chart, yes, here you see. So while you're going to see here this chart, and it's going to be open. So when the dollar ripped higher in 2022 and the Nasdaq went collapsed, let me show you the Nasdaq here. Here you see from 2022 to 2023 till like almost 2023, okay? So now if I open same way Nasdaq here from 2022 to 2023, yes, you see here all this. So when the dollar was actually really higher in 2022, the Nasdaq actually collapsed right here. Now you can see here on the chart. That's not just a magic, that's actually a math. So when trader, they look at the chart, it seems easy, but oil and the dollar are like puzzles pieces. You know what oil and the dollar remind me of? They are like two friends walking into the party. If they both shows up loud and aggressive, the vibes in the room really dies. Even everyone gets more uncomfortable. That's a stageflation. If oil shows up quiet, but the dollar is still yelling, like people start thinking of the party overlay. So party over early, recessions like recession vibes. So if oil's hyped and the dollar is chilled out, the party feels like a fun. But deep down, you know the cop might shows up, right? So that's inflation risk. And if both of them come in relaxed, that's when the dance floor fills up. Markets rally. Everyone feels like really good. That's how I look at the chart. Not chart and formulas, just personalities. Oil and the dollar set the mood for the whole market. And once you start thinking of them that way, you will feel the market's mood before CNBC even tells you what's going to happen. So once you start reading this kind of a combo, you can actually predict market mood before it hits the headlines. So let me show you how I traded this. In June 2022, oil and dollar both peaked, and I stayed away from the tech, focused on short setups. It saved me from getting wrecked, and in late 2023, dollar softened and oil cooled down. I lent risk on ROD and the Nasdaq bounced. This isn't hindsight. It's literally watching two charts and connecting them together. So once you connect them together, you're going to understand about this. And here is the something which people don't like to admit, or you can say traders don't like to admit. More traders blow up their accounts from ignoring oil and the dollar than from chasing meme stocks. And that's a crazy thing, to be honest. The clues were right there on the chart the whole time. So that's why next time we are diving into the bonds and the yields. Because if oils and the dollars are the gas and the brakes, bonds are the actual driver of the entire market car. And you don't want to miss that ride.